All right, from shifts in global indices to currency movements, it's a day of key market activity today that we simply cannot overlook. Let's dive into the numbers and see what they mean for businesses and investors in Eswatini as well as the whole globe. Sanele Sibia has joined us virtually today via a Zoom link. Sanele, a very good afternoon to you. UCAT's U.S. market surge today. We've seen a modest uptake across the U.S. markets. Dow Jones up by 0.15%, S&P 500 rising by 0.28%. What do you believe is driving this positivity in the U.S. markets, and should local investors be paying attention to any specific sectors?
Good afternoon, Mr. Malo. Thank you for having me. So what we are seeing in terms of the numbers today is, we are seeing Wall Street just reacting to that interest rate cut. It's still, we are still awaiting for a barrage of economic data to come out and show us whether the economy is still in good standing in terms of economic wealth, and then we should start seeing more of this kind of bullish market return, probably later in the week after we've seen that surge after we see that economic data come out telling us where we should really look in terms of the market. But yeah, we should expect this this trend to actually sustain. What we're seeing, more especially with the Nasdaq, is even though we are seeing those worries within Intel,
I very much I regret to apologize to our viewers that we are facing a few technical issues on Sanele Sibia's end. We are making efforts, though, to make sure that we have him connect with us once again. But he was still explaining the surge that we are seeing in the U.S. markets today. Our question to him: should local investors be paying attention to any specific sectors with this rise? Is it good? Is it bad? He is still chiming in, and we hope that he's connecting really soon. But perhaps before he connects, we do want to make sure that we also chime into the European stability. We are seeing something really interesting there as well happen. FTSE 100 has risen by 0.36%, but something is very, very intriguing outside of that. The DAX is steady climbing, and it's off 0.69% today. We will want to hear from Sanele how he sees Europe's performance influencing investment decision here at home again. We are seeing a surge in the U.S. markets, some climbs as well when we turn our attention into the European market. And perhaps because time will allow, I am sure it's 21 minutes after 2, we have ample time to also look into what is happening in Asia. Of course, what we saw yesterday is different from what we are seeing today. Asian markets have had a strong day, but let's go back to the U.S. markets. I am learning that Sanele is back and he has joined us. Thank you so much for your prompt reconnection, Sanele. Seeing a modest uptick across the U.S. markets, Dow Jones up, S&P 500 rising. What do you believe is driving this positivity in the U.S. markets?
What we are seeing in terms of the markets, Mr. Ngumalo, I hope you can hear me now. So what we are seeing in terms of the markets is basically markets are trying to adjust and respond to that 50 basis point cut we saw last week Thursday. So that actually markets are looking at whether that's a signal from the Federal Reserve Bank to say that we are seeing those, should there be anything to fear in the market, or is it basically an issue to say we've held on to the rates far too high and we are just starting to let them go right now? So we are waiting to see how that is going to turn out across the week as we get more economic data to give us insights in terms of the health of the economy, of the U.S. economy that is, and then to see. And if we get data that says, the U.S. economy is still in good shape and it's still in good standing, we should then expect to see those numbers ticking upward and really just ticking up, Mr. Ngumalo.
It's an interesting spectacle, what is happening in New York. And of course, the United Nations General Assembly happening there. We are seeing some of the meetings that are happening there regarding the markets as well. I think in particular, what the South African government is doing there with Cyril Ramaphosa and his delegation, some key investment decisions. We saw he met up with Elon Musk there. Should we expect, that to effect on the markets really soon?
Yes, no, that actually is going to start chiming into the markets. But also do bear in mind that we have that meeting we have the elections coming up in November. So that what we are going to see in terms of those meetings is most likely an impact post the elections. But what we should be seeing in the short term is we should see congruent movements occurring in those developing markets, like your South African markets and all these other markets. So we should expect those conversations to have an impact in terms of where we should see the developing markets really sitting, Mr. Nguman.
All right, some stability as well in the European side. FTSE 100 rising by 0.36%. But what is most intriguing here? DAX is steady climbing and it's off 0.69%. How do you see Europe's performance influencing investment decisions here at home?
So what we are seeing here across Europe, Mr. Ngumalo, is the fact that we've seen with the UK yesterday, we saw the Chancellor of the Exchequer there really coming out to say to the people of the UK that the age of austerity is over. What the UK economy wants to do right now is to rebuild and build back and come back and build back better and come back to the world stage. So we should see, if the UK when the Chancellor tables her budget sometime next week, we should then start seeing more movements and it should become more clearer in terms of where, if any opportunities are going to arise as the UK climbs back to the world stage and tries to lead growth and tries to lead an investment case across the UK. So that's why we're seeing the FTSE there ticking up purely because on those sentiments that the age of austerity within the UK is over and there's an entire 10-year plan that's up there and that seeks to rebuild and invigorate economic growth within the UK economy and an entire industrialization strategy that should follow that. So I think what investors need to look for domestically is in terms of the real market, what opportunities exist for one to get on that bandwagon of the UK that's gaining prominence again on the world stage. I don't know if you look in overall Eurozone, you'll see that with Germany and with France, there is that small uptick, but the French story there is quite interesting in the fact that we are seeing that France's public debt has actually surpassed that of Spain. That's something that last happened 8 years ago. So we're seeing that France continues to battle with those bad deficit issues, but we do hope that with time those will fizzle out. And then when you look into the German economy, you will see that the projections for growth in Germany are really not so smooth. And now when we're looking at the purchasing managers indices that have come out like yesterday, they do show that there's been a bit of a slowdown in terms of those manufacturing orders. So we do hope that the German economy will actually find some strategies or some turnaround strategies, Mr. Nima. But right now, that is driven purely by that interest rate and that demand uptick.
Yeah, you know what? I'm realizing that it's like we have opened the refrigerator that belongs to a vegetarian today. It's a lot of green, and similarly in the Asian markets, they've had quite a strong day. Hang Seng Index is surging as well. I think it's about 4.13%. Shanghai Composite up by 4.15%. Can you break down the key factors behind this rally, and perhaps what ripple effects might this have on our local economy?
So what we're seeing there happening is, the Asian economies are largely exporting economies. So with these changes in interest rates and, the forecast in demand is, we do expect those to take an uptick. And then when you look into Hang Seng, you will see that they gained some 4% and, on that 19,000 mark for the first time in so many years. And, ever since COVID, that market is still trying to get back to those 21,000 levels that it was at. So now with this easing of monetary policy, we're seeing Hang Seng reacting positively. And in mainland China, what we are seeing there as well is they also did cut interest rates just yesterday, and markets are responding positively to that. And there is a new stimulus package that is aimed at driving the economy and growing the economy. So that's why we are seeing the overall Asians performing well as well on the background of a drop in the interest rates.
Yeah, suddenly if you've seen, a teacher ask a very simple question in class and everyone has their hands up, that's exactly what we're seeing today. Everything is just up with these indices. And closer to home, JSE All Share Index is up by 1.13%. Given Eswatini's close economic ties with South Africa, how does this positive movement perhaps impact investor confidence here, and what should businesses be aware of?
So looking at those numbers, because those are yesterday's numbers, since today is actually a holiday in South Africa, we saw that the Johannesburg Stock Exchange really is rallying positively to those, to those interest rate news. So what we are looking at there is, those should also trickle into the domestic economy, considering that we are.
All right, we have lost Sanele Sibiya. Really, really regret saying that to you, but it's quite obvious. But we were hopeful to touch on currency markets as well. For a moment, USD SZL is up by 0.12%. Euro SZL dipped slightly, which is a first today. But perhaps trends that we are seeing in global markets today, and we wanted to understand the fluctuations and how they affect cross-border trade as well as local purchasing power, commodities outlook as well. Perhaps just to give you an overview of what we are seeing here, Brent crude jumps by 2.42% today, along with the modest rise in gold. And given Eswatini's import reliance on energy and the global demand for commodities, we would have loved to learn from Sanele how businesses should, here at home, position themselves in light of these movements. Otherwise, this has been the inaugural episode of the ERS Market View, and we thank you so much for staying with us as we commence this very first episode. We are hopeful that you'll be with us again for our other programs today as well as tomorrow. We hope that you enjoy your afternoon today and your evening as well. Goodbye.